Always interpret the news in a reverse way. Like for example, all over there's a news going on, you can buy this particular stock or something. You have to be more careful like not to buy that particular stock.
Welcome to another electrifying episode of the Mindful Selling Podcast. We are diving into the mind of a dynamic force in the stock market world. With finance running deep in his family for over 3 decades, his insightful approach has led him to teach nearly thousands of students, even globally from Dubai to Canada. He has built a reputation on simplifying complex stock market strategies. I'm a man who truly knows how to bring value to the market with a personal net worth of $1 million, the founder of the value-focused stock market classes. Please welcome Mr. Tejas Sarate.
I started watching documentaries, reading non-fictional books, and when I was going through many businesses, I came to know each and every businesses is somehow related to stock market.
One stock that no one is talking about, but you believe will skyrocket in the next 5 years.
I'll give you Suzlon for next 5 years.
What's a major mistake that you have made in your investing journey, and what did you learn from it?
If you keep your money into the FD, that means after 10 years, you're actually depreciating your capital more than 60-70%, where we get annual return of 5, 5.5, 6.5%, that is actually the inflation rate of what the economy is having in India. It's a slow poison for your capital.
Okay. So with a personal net worth of $1 million, let's get ready for some mind-blowing financial wisdom from the man who truly knows how to bring value to the market, the founder of the value-focused stock market classes. Please welcome Mr. Tejas Sarate.
Thank you so much, Rachika, for inviting me on your wonderful podcast. Thank you so much.
You're most welcome, Tejas. Thank you so much for coming for the podcast.
Thanks a lot.
Anyways, so Tejas, how did you get started in this space?
I have a very long answer to this. So I had, my liking towards businesses, and I started learning more about businesses from a very young age. So I started watching documentaries, reading non-fictional books. That is how I started. And when I was, going through many businesses, I came to know each and every businesses is somehow related to stock market. And then slowly, I started learning about stock markets as well. And then that is how I land up over here. So it wasn't many people, they have a very different start. They want to learn capital markets because they want to make money out of it. My approach was very different. My start was very different. And that is how I have landed up over here. So it
And
was
that's
always, I'm a very business-minded person always. I've always been and I'll always be. That is how my, thinking is. So it is just because of that.
well, we are lucky you got into this because that's how we got you here in the first place, and you got so big.
Yeah.
I think I have not heard anyone speaking of this before, but you got learning about all these things to know more about business rather than gaining
Hmm.
more money. So you don't have any greed or any, how can I say, any perfect intention of getting more and more money or making that money multiplied a lot of times. And that's something, that's quite unique, I would say. Yeah.
Yeah. Yeah.
They just, for our podcast, I have planned something different this time.
Okay.
So, how about we'll have a quick rapid fire between us so
Sure.
that.
I would love that. Yeah.
Yeah. All right, fine. So, moving on to the podcast, you'll have enough time to answer one question, and
Yeah.
then we'll move on to the next one. Okay, short
Okay.
answers.
Okay. Yeah. Yeah.
All
Yeah.
right. So, what's the best stock that you would suggest holding for the next 5 years?
Definitely Tata Motors. Next one.
Great. What are the top three indicators you would rely before making a trade?
I wouldn't rely on top three, top five indicators. I would rely only on candlesticks and the support and resistance. That's it.
Great.
Yeah.
One stock you would buy without hesitation today.
Reliance Industries Limited.
All right. Quickest way to spot a stock growth potential.
There is no quickest way.
All right. Best fundamental metric for a long-term investment.
Multiple of them, not a single one. ROC, ROE ratio, PE ratio, sales growth, the P&L statements, balance sheet, everything.
Top rule to follow for trading options.
Top rule to follow, never lose your capital.
That's a wise answer. How should investors adjust their portfolios for a potential recession?
Always have multiple basket of sectors, one investor can definitely invest in multiple sectors. Therefore, how that is the way they can save their portfolio. They can also invest in gold, so whenever there is a recession or something, gold will always increase. That is how they can save their portfolios.
Oh, all right. Futures
Yeah,
or options? Which is the better wealth builder?
none of them.
What's one stock to avoid right now?
All the PSU stocks as of now.
What's a common misconception about trading psychology?
That anybody can make money in the market.
All right, fine. Now, getting down to a bit more serious questions. Yeah.
Yeah.
Tell me the top five fundamental ratios to evaluate a long-term stock.
Okay, so top five would definitely be, there are actually many of them, and it would be wrong for me to say you just go through top five or top 10. That would definitely be wrong. But if you're still asking me top five, it would definitely be the P ratio, ROC ratio, ROE ratio, sales growth for 3, 5, and 7 years, the P&L statement, debt to equity ratio, and so on. So these are top five for me. Like
All right.
looking at these five, I can easily know where the company is standing.
All
Yeah.
right. Thank you. What strategies can I use to build a diversified investment portfolio without any significant capital?
Stock market is always considered as a business, and if we are starting any new business, you need capital first. And definitely to invest in capital markets, you need money at first hand, because over here your money is going to make money for you. That is how it is. Starting with a small capital or starting with a very, very small amount wouldn't do great things for you. My another answer to this would be, if you are starting very small, just do it consistently for next 5 years, 10 years. Keep on investing whatever you are able to save, and that is how you can generate good amount of wealth.
All right. Moving on to the next question. How do I interpret financial news and reports to make informed decisions, about an investment?
Always interpret the news in a reverse way. Like, for example, all over there's a news going on, you can buy this particular stock or something. You have to be more careful that not to buy that particular stock. It is because there are a few investors who have already, bought these shares or stocks, and now these people are going to just dump the shares, and market doesn't have that particular liquidity required. So these people are just promoting their shares through news media outlets, and especially beginners are getting trapped over here. And that is how beginners, they start losing money into the capital markets. They just follow the news, they buy whatever these people are saying and telling them, advising them, and that is how they are getting trapped. And the bigger investors, the bigger sharks, they are going to sell off their shares.
That's how the market works. Well said.
Yeah.
Well said. What specific market signals do you look before recommending a trade?
For a trade, market signals, there are many things actually. Not every day in the market is same. You have to be extra smart, more cunning, and top of the world, to take out a good trade from the market. So you have to look on many different things. If you just want to know where our markets are going to be biased towards the first half or the second half, I'll give you a very short answer to this. Let's say if you want to make out where our markets are going to trade around the first half, you can simply go on money control website, go on global indices, you see multiple indices over there, and take top 5, top 6 indexes out of that. Take the European markets, take the Asian markets, and take the American markets. That's it. To give you a very simple idea, let's say our markets are trading from 9:15 to 3:30. Now, what markets are showing you is, it's a mirror, a reflection of a global economy. Okay, so whatever Indian markets trade is a reflection of a global economy. Now, after that, after 3:30, when our markets were closed, definitely European markets were trading till the evening time. You have to observe that how they have been closing. After that, throughout the night, the American markets were trading. You can observe the American market as well. And early morning, Shanghai Composite starts trading. That is the Chinese market. So you can actually break these things down, see what is the exact percent change into the particular market. I have created my own formula based on that. We just add up those, subtract the negative, whatever it is, divide by 6. That is, there is a higher probability that our Indian markets the next day might trade in that particular zone. So there are many things, this is one of the smallest thing, but there are similar such things, what we can do.
That's actually a 24-hour surveillance of your stock, and
Yes, but it
that
is
is
quite easy.
oh, it's quite easy. All right.
Hmm.
Well, easy for you to say, but
It's
anyways.
easy for our students as well. Hardly it takes 30 minutes to teach how it has been, how we do these things. And students can, do it very easily. Easy mathematics.
All right. Okay. Now, I would like to ask you that as you've mentioned all these other, websites as well, are there any few websites apart from the regular ones which are going to give you accurate information of the stocks?
There are many websites to give you accurate information about the stock. Money Control is the best of them. Money Control is the best of them.
All right. And do you need to have?
Whatever information you want, like the dividend history, the bonus history, about the AGMs, everything. You get all the reports over there. You get everything that is required, and it
All
is
right.
definitely free of cost. Yeah.
I want to ask you something, Tejas. There are so many other coaches in the market who keep
Yeah.
on teaching finance, who keep on teaching mutual funds, who keep on teaching equity, every other
Mm-hmm.
thing out there. And
Yeah.
they promise a lot of things to the public that, we will increase this, a lot of value basically in return. So, what
Yeah.
makes you stand out from all the other coaches in the stock market domain?
See now, majority of them, they are providing courses in way different formats, many different formats. Like these people have broken down basic course is a separate one, future option course is a separate one, future option advanced level is a separate one again. So people have to pay at every step. That is how, and it's not ethical to charge your clients again and again and again for the same thing, even though if you are getting new piece of knowledge, but a client should always know how much entirely they need to pay to get the full set of education. So we always tell them clearly how much we are going to charge for all 11 courses that we provide, and all the 11 courses they need to complete before even they start practicing. you know it takes around 2 to 3 years of time for our students to go through everything, practice, and then only these people can start trading an investment journey. It would be not bad to say, but they need to practice a lot. They need to practice a lot. That is the harsh truth. Nothing, is there's no shortcut way over here. Definitely. Other coaches, they will give fake promises that you will start trading or earning within 2 months, 3 months. Things won't happen. If that would have been the case, the entire world would have taken that particular thing.
Absolutely. Absolutely.
Yeah. So we are very genuine with our clients.
All right. What's a piece of trading advice that you believe works for only you and it might not work for anyone else?
Uh, there are many things again in this. Whosoever is a student of value focused, I have taught them everything. So there is nothing that special that will work only for me and not my students. Definitely, if it is working for me, it is going to work for my students as well. We never hide anything from our students. So nothing like sort of that.
All right.
Yeah.
So transparency
Yeah.
is there.
Transparency, 100% transparency everywhere. Yeah.
Well, that's it's good to know.
Mhm.
In your lifetime, what's a major mistake that you have made in your investing journey that no one in your family has made, and what did you learn from it?
I don't know about the family. I'll tell about my biggest mistake. So I teach people not to, invest their money or majority part of their funds into the FD fixed deposits, where we get annual return of 5.5, 6.5%. That is actually the inflation rate of what the economy we are having in India. That is the worst thing. If you keep your money into the FD, that means after 10 years, you are actually depreciating your capital more than 60-70%. That is how it has to be taken. So if anybody is parking their money into the FD, that means you're letting the banks eat up your money and you're just dying slowly. It's a slow poison for your capital. That is the biggest mistake I did make. To be on a safer side, I invested very smaller amounts into the markets, and I kept majority of my money into the fixed deposits to get a safer income. That was my initial start. So that was a mistake, yeah. And I knew there were few stocks which are going to rise. I knew Reliance was going to cross this particular figure, whatever it was, 4 times, 5 times back then. But then I regret it now. But that has always been the case. You ask any trader, any investor, regrets are always there, because now I can see this particular stock has reached over here. Back then, I had seen that was the value. I have thought that time whether if I would have invested this today, maybe I would have more capital with me.
Well, the net worth definitely would have grown a lot.
A lot, massively.
All right, fine. In a volatile market, you not only need strategy, but you also need psychology, right? Can you share a
Yeah.
moment where your emotions almost sabotaged a trade and you saved it last minute?
So it was a expiry day, and I was trading into Bank Nifty options. So what had happened basically, I had entered a particular call option somewhere around 100 rupee price point, and my decision had gone wrong. This is about 2017-18 I'm talking about. Okay, the trade came, the particular call option came at around just 2 rupees at the end of the day, and it was like more 30-40 minutes for markets to close, and I was just hoping for the best. Now the thing is, when we don't close our positions, brokers back then used to charge some big amount of money. So if I don't sell particular call option at 2 rupee, I have to pay some extra fine as well. But then I took a bigger risk. I said, okay, whatever the fine would be, I'm ready to pay that. But then let's hold it. It was very simple. That particular call option was trading at 100. It has now reached as low as 2 rupee. 98% is already washed away. So let us hope for the best. And then luckily, the call option shot up to 250 rupees by end of the market. And that is how I made some good money over there. But then, yeah, uh, every day is not the same. I have lost a lot as well. Yeah.
So is it
Multiple times I have lost as well.
correct to say that you've lost more than you've gained?
No, not at all. I've gained more than what I lost. See, nowadays my strategy is very different. I'm more of a swing trader now, less of a options and futures trader, because when you have a decent capital, going into equity trade is more advisable for all of you. That is how you can keep your capital more safer and grow in a very better way, better manner.
Equity trade. Noted.
Yeah, yeah, yeah. Equity trade. So, to give you a simple strategy, what I'm following nowadays, since many years it has been working for me. I select good quality blue chip stocks. Whenever these stocks are falling, we buy the shares. It goes up 5%, 7%, we exit. Again, it will come down. We buy the same. Again, it will go up. We will sell. You know. Here, if I go wrong, I do not have to exit compulsorily, whereas in future and options, I have to exit because it has expiry. I can't hold my product after that. In equity, I can hold it. That's a major difference for me. So if I'm playing with bigger capital, this one is much, much safer for me.
All right. Okay.
Yeah.
Thank you so much for that answer, Tejas.
Yeah.
Moving on to
And
the
we never book into the losses. If I'm holding 20 stocks at a moment, even if
Mhm.
my 10 or 15 stocks are at a loss, I'll hold them for 10 days, 15 days, 20 days, 25 days. Slowly, slowly, the stocks again, start coming up, and we exit in profit only. So, things work much in a better way, and, with a larger capital.
All right. All right. Okay.
Yeah.
Okay. Thank you so much for that insightful information, Tejas. That was
Yeah.
very, very helpful. And I'm pretty sure
Thank you.
all of you sitting out there are definitely going to thank me for this. Yeah. Moving on, guys. Uh, Now, Tejas, this one is pretty interesting.
Yeah.
If you had to bet your entire net worth on one stock for the next 10 years, which one would it be
I wouldn't
and
bet on one stock, first of all. But still,
why?
if I want to answer your question, it would definitely be Reliance Industries Limited. The company is so diversified into so many sectors, different sectors and subsectors. The company is going to survive a lot many years. That is what I definitely know. It has given a lot of value to Indian investors, and it will keep on giving a lot of value to its shareholders down the line as well. So definitely it is going to be RIL.
Okay.
If I want to bet everything, yeah. But I won't.
Reliance
I would
Industries.
rather create a portfolio, of multiple stocks. You should always have a basket of portfolio, multiple
Oh,
stocks
so
into
you'll
it.
create
That is
multiple
how.
portfolios. Okay.
Yeah. So if let's say if I'm investing 100% of my capital somewhere,
Mm-hmm.
to be on a higher riskier side, I would put 60, 70%. I would put, okay, I'm not advising this to all of you, but this is what I'm doing. I would put 60, 70% of my capital into the equity shares, for long term. 30% would go into FDs, gold, and other assets as well. Yeah.
All right.
So it's kind
That's
of a
useful.
recession proof as well, if anything goes wrong, you have some
Mhm.
capital left with you to, survive again and grow into the future.
And we are hearing, recession whispers here and there. How
We are
soon can you
hearing since 2018. A COVID fall was similar to that, and I'm not expecting a recession before 2027.
Okay,
Yeah,
let's count on that. Yeah. But I
yeah.
think in the recent news also I thought that why people are not getting enough jobs, why the employment is going so down. It's basically because recession has started in India. It's like just
I
started.
personally think a recession would come, but into the year 2027 and 2028, and a good one.
Strong, hard one.
Yeah,
Hmm.
yeah.
All right. What's a piece of financial advice that you fundamentally disagree with, but it is still widely accepted all over the market?
I would like to tell you about one fundamental ratio called as P ratio. So
Mm-hmm.
what is P ratio for if any of the viewers don't know what P ratio is? Let's say a P ratio is around 5. Any stock is having a P ratio around 5. That particularly means that I have to invest 5 rupee throughout the year to make that 1 rupee with that particular company. That is what P ratio is. Now into the books, if you actually want to take a stock which is valuable, would give good value to you, which could be a good buy, into the books, it is always written that you should buy a stock with a P ratio of 6, 7, and 8, which I completely disagree. Into the today's market, especially the Indian markets where the economy is developing rapidly, you are not going to find any stock with a P ratio of 6, 7, or 8. Good quality stocks will have a P ratio of 30, 35, 40, 45, 50, and so on. It could be as high as 100, 150, or 200, so you have to be ready for that, to pay the extra amount. That is how far we have come. So that is there. Many people still agree with these things because it is widely written into the investment journals, books, and everywhere that you should pick a stock with a P ratio of 6, 7, 8. I completely disagree. You are going to get crap and only bad quality stocks with a P ratio of 6, 7, 8. Hardly, 1 out of 100 could be a better one, or could be a very good stock. The rest other 99 of them are going to be the worst. Yeah.
All right. So definitely 6-7 P ratio is not something you're looking for. Is not something you want to
Not
go
at
for.
all. Not at all. I don't look at the P ratio that way. I can take it in another way. If the P ratio of any particular stock is high, let's say 30, 35, or 40, I can assume in another way that many of the investors are still ready to buy the stock, paying a higher amount. That means they are finding a value in that particular company. That is how we can take it nowadays. Things have changed. Yeah.
Likewise. True. True.
Yeah.
So moving on to the end part of our interview, I still have two beautiful questions remaining, Tejas.
Okay.
What's
Okay.
the one stock that no one is talking about, but you believe will skyrocket in the next year?
In the next year, that's a very short span of time. Give me more number of years.
Next 5 years?
Next 5 years, I'll give you Suzlon for next 5 years. Just keep a watch on that. The company would definitely perform better in next 5 years.
We have
Yeah.
insider wisdom. All right.
Yeah.
Okay. All right. Um, and I guess that will be moving on for our last question of the day, Tejas.
Yeah. Yeah.
If you could give one piece of insider training wisdom to a beginner and that
Mhm.
could change their life, what would it be?
Insider trading wisdom, the insider news and everything is a gimmick for the common people out there, especially the beginners, get trapped with the news and the media. To give you a simple answer to this, there are people who have invested 50 crores, 100 crores, 500 crores, even thousands, 10 thousands of crores in particular companies. And these people, have particular target that the particular stock might reach from 300 to 500 or 700 whatsoever. Now what happens when these people buy the shares? Let's say these people are buying at 300 rupee price point. Now there has to be some another buyer as well when the share actually starts increasing, because if these people are going to sell in huge quantity, there has to be a buyer. And when there are more number of buyers, then only your stock price is going to rise. So these people, buy the shares 6 months earlier, 8 months earlier, or even 2 months earlier, before everybody starts buying. Then there are few things. These stocks are getting promoted onto the media channels or on Telegram groups or on the WhatsApp groups, and lakhs of people are buying it, So people actually start investing in these particular shares, these particular companies, and then that is the point, these big investors, bigger sharks, they start dumping their shares. So what happens? A stock was priced at 300. Slowly it went to 350, 400, 450, 500. These people start dumping. And there are still active buyers into the market who are buying like idiots. They shouldn't buy. They shouldn't buy. They should be panicked. That if something is getting promoted, stay away from it. Stay away from it. You know,
Absolutely.
good things never require that kind of marketing. Good things get promoted in a very easy way. If everybody is promoting a particular company or a stock on the
Something wrong
media,
with it.
something is wrong. Definitely something is wrong.
All right.
Yeah.
Books you would like to suggest for the beginners for them to
Mhm.
understand more without investing any courses?
Okay, so I am publishing my own book, which will be out by next year. You can read that book, Value Focused Investing. Okay, it will be very easy for you to understand. If you want to learn more about capital markets, definitely I would like to promote my own brand over here. You can join the Value Focused courses, and there are many books actually. Intelligent Investor, Snowball is there. Technical analysis of the financial markets by New York Institutes of Finance. Many books are there. But then I have taken all the best from all the books. I've had my own experience as well, and I'll deliver you the best. So you can actually, go through our course rather than going through many books. I'm giving you a straightforward answer. Yeah, I'm promoting my business as well, but that is what is going to actually help you a lot.
Yeah,
Yeah.
I definitely believe you, and it's going to help the viewers and the beginners as well as the pros in this market. So, thank you so much, Tejas, for coming.
Thank you
It
so much.
was
Thank you so much.
extreme pleasure to have you in the
Yeah.
podcast because I
Yeah.
really got so much value out of the founder of Value Focused.
Thank
Any
you
last
so much,
words?
Rishika. Thank you so much. Any last?
Any last words for the viewers?
Any last few words, would be I want our Indian citizens to invest heavily into the Indian capital markets. The reason why, because India is on a developing path now, and I see India will be doing well in next 30 to 50 years, point of time. There was a time where we need to invest in, we would have invested in American markets. People always take example of American markets. They still think American markets are better than the Indian market. It's wrong. Indian markets are better as of now because we are still a developing economy, and you can make good money into a developing economy rather than a developed economy. Where the inflation is high, there is where you can actually make big money into the capital markets. Always remember this. So for the next 50 years, golden era for whosoever is investing into the Indian capital markets. All the best to you.
All right. Thank you so much, Tejas.
Thank
And
you so
guys,
much.
I hope you enjoyed this episode because this was something apart from selling and psychology, but I really could not miss out on Tejas and give you this brilliant value and insights. So, see you in the next episode. Till then, peace out.
Thank you so much, all of you. Thank you.